fundsupermart.com.
After the equity sell-off last year, global equity markets rebounded over 11% in the first quarter of this year. Hence, most of the equity funds on our platform were able to deliver a positive return. Last quarter, the best performing equity funds were mainly Indian and Russian equity funds. Both markets delivered strong returns. Last year, the Indian stock market was the worst performer out of the markets in our coverage. In Hong Kong dollar terms, it dropped 37%. So when sentiment improved this year, boosted by moderating inflationary pressures, the market rebounded 17%. On the other hand, out of the 10 best performing equity funds, there were 2 single-country Russian equity funds and 3 emerging European equity funds which invest heavily in Russia. Russia was also one of the weak performers last year, and in the first quarter rebounded even more, by 19%. The Russian equity market performance was supported by higher oil prices. But apart from India and Russia, Thailand's single-country equity funds also performed well. Despite being hit by severe flooding, the Thailand single-country equity fund's average return in the first quarter was 19%. The market's performance was mainly boosted by the government's post-flood stimulus package. As for the worst performing equity funds, since all the markets in our coverage managed to reap a positive return, there was only one fund on our platform that recorded a loss, and the loss was less than 1%. As we can see from this table, the worst performers last quarter were mainly agriculture, resources, and energy funds. These funds were mainly dragged down by weak commodity prices. Although Brent crude oil rose 14%, the West Texas Intermediate crude oil rose only 4%, and the Reuters CRB Commodity Index rose just 1%. Looking at regional equity funds' performances, the emerging regional equity markets outperformed in general, as risky assets were sought after once again. Investors' risk appetite returned, mainly because worries over the European debt crisis had moderated, and there were hints of renewed support for the global economy coming from the U.S. Federal Reserve. Last quarter, Eastern Europe, Latin America, and ASEAN regional funds outperformed. These 3 regions were boosted by the excellent performance delivered by Russia, Brazil, and Thailand. As for sectors, we saw cyclical sector funds outperform as market sentiment improved. Financials were among the sectors worst hit by the equity markets rout last year, as investors were concerned that the Eurozone would break up. These funds dropped 21% on average last year. But in the first quarter of this year, we saw financials rebound, with the average fund returning 19%. On the other hand, the technology sector has continued to perform well, with the average fund gaining 17%. This is consistent with our favorable view of the sector. Despite a strong rally in the first quarter of this year, we maintain our positive outlook on the equity markets.